Welcome to another Wall Street Informer production on WSI TV.
Welcome back for another Friday edition of WSI TV. That's Sean Bauer, I'm Jordan Bishop, and today we're going to introduce you to the stocks that are going to pay you twice. Now, in order to be eligible to get paid twice, you're going to have to know a little bit about dividends.
Right, and to keep things simple, just look at a dividend as your reward for owning stock in a company. Now, most companies pay out dividends quarterly. Some could be semi-annually, just once a year. Some do it monthly even, but of course it varies from company to company. The vast majority pay out quarterly though. Now, in order to be eligible to receive these dividend payouts, you do need to own shares in the company by the ex-dividend date, which obviously comes before the actual dividend is paid out. But if you do own at least one share, you are eligible to receive that dividend payout. Again, it comes at a later date, and it's all based on the number of shares you own. Now, a really quick and easy way to sort of determine who has a good dividend or not is to look at dividend yield, which of course is just in relation to how much the stock costs and how big the dividend is. So something could pay out a dividend of $1 per share, some might be $10 per share, but of course it all varies according to how much the actual share prices cost. So the higher the dividend yield, normally the better in a vacuum, but of course there are some dangers as well. So while a high dividend is a good thing normally, that's not all there is to this puzzle, Jordan.
Right, and one mistake we're going to help you sidestep here is the mistake dividend traders make. You know, all they look at is the dividend yield, and they jump in on that stock.
Right.
Now, as we all know, you're going to want to look for high growth stocks, stocks with good looking charts, the type of stocks we put out on a weekly basis to our premium subscribers. But you really want to consider the high growth in the stock with a decent dividend on top of that.
Yeah, that's right. I mean, we're not just talking about finding dividend stocks. Of course, anybody can do that. But again, like Jordan said, using our systems to find really good looking stocks is a huge part of this. And just to run you through a quick example here, I randomly picked out Invesco Mortgage Capital. The share price is $16.89, and it pays out a dividend of $1.60 per share annually. So if you own 1,000 shares of Invesco Mortgage Capital, by the end of the year, whether it pays out quarterly or however it is, by the end of the year, you basically get a free payout, a dividend payout of $1,600 just for owning this stock. But this is also one that's been looking good. It's been growing. So it's a fantastic way where you're getting paid by profit on the stock as well as these dividend payments.
Exactly. But to bring it to the other side of it, if we were just looking at high dividend stocks, I've got two great examples for you. Now compare these stocks. I have Horizons ETF Trust, which the ticker is QYLD, pays out a 10.2% yield. And then I've got American Capital Senior ETF, ticker sign ACSF, also a 10.2% yield.
Right.
Now, a dividend chaser might trade both of those. That's a pretty high dividend. 10.2% a year is great. But looking at the stocks, both since March, ACSF has lost 15%. Wow. Now, QYLD, on the other hand, looks more like Invesco, and it's gained 8.2%.
Right.
So it's pretty obvious which one you'd like to trade if you want to get paid twice. As we both know, QYLD takes the cake on that one. Right. Because with ACSF, you would have actually lost money, even though you've got those dividends coming in. But as the stock price goes down, obviously that percentage is accounted for in that drop in stock price.
Yeah, that's a great lesson. I mean, basically identical dividend yields, but of course you lose massively on that loser that you just pointed out. It's not even close. Your dividend payout won't come close to covering losses, like 15% like that.
Exactly.
So of course it's not just looking at dividend yield like we're talking about. We need those really good stocks to be picked out as well. And the dividend part of it is really, really simple. I mean, the money's deposited directly into your account, and it's yours to spend however you'd like.
Exactly, Sean. And what we want you to do right now is to look at your portfolio, find out if you've got any stocks that you're keeping solely on the dividend. Maybe they're not doing so well. You need to just cut them loose completely, because if you keep riding them, eventually when you go to liquidate that stock, you're going to realize how much money you've lost just for that small dividend that you've been taking in. On the other hand, replace these stocks with some high dividend stocks that look great. Maybe they're climbing up their moving average, or use some of the techniques we give you week in and week out to find a good stock. And if it has that high dividend, then there's your stock that's going to pay you twice. Well, thanks for being here with us. From Sean and myself, we'll see you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.